everybody, my name is Emily and I will be your hostess for today. To start with, today we will have a discussion about the fundamentals with our senior research analyst Peter Yosif, followed by the technical analysis of the day. After this, our head of conversion, Sawas Hamdan, will be describing in detail our most popular account types along with Odysseus Louvaris, account manager. For closing, our affiliate supervisor, Jack Carter, will be joining me in a Q&A session regarding our affiliate program. So, hi Peter.
Hi.
What's up in the economic calendar for today?
Well, we have practically ECB's interest rate decision. Other than that, we note also in the American session the release of the US weekly initial jobless claims figure. And on the monetary front, we would be noting practically BOC Governor Tiff McClem, which will be making some comments. In the Asian session tomorrow early, we make a start with New Zealand's electronic sales growth rate, and later on we get from Japan the corporate goods prices growth rate, and the last release would be China's inflation metrics. All of the above in the Asian session being practically for the month of May.
Okay, and what is expected to be the highlight?
Well, the highlight actually is definitely the ECB interest rate decision. The bank is expected to remain on hold. That would be keeping the deposit rate at minus 0.5% and the refinancing rate at 0.5%. There are some market participants which tend to expect a small rate hike of 10 basis points in the deposit rate, thus going from minus 0.5% to minus 0.4%. But in the big picture, I think that's not going to be the material basis for the euro movement today. The main issue would be the forward guidance and whether the bank is going to be practically making a hawkish pivot and practically reaffirming that there will be rate hikes to come, probably in July and September meetings. I would also highlight the possibility of the bank actually announcing that there will be an end to its asset purchases in the third quarter, probably at the early stages of the third quarter. That would be around July. And that would be practically another green light for the bank to start tightening its monetary policy. Should the ECB President Lagarde, in her press conference around 40 minutes later, actually provide a hawkish tone, a confident tone, we may see the euro getting some substantial support, especially should ECB President Lagarde actually start leaning on a 50 basis point rate hike. However, that seems to be, for the time being, a more remote scenario. It was characteristic that in the past week we had comments made by ECB board member and chief economist Philip Lane, where he stated that practically quarter basis points rate hikes would be his benchmark for the July and September meetings. So overall, we may see a bank which is trying to pave the way for rate hikes to come, leaning on the hawkish side, preparing the markets, and all of that combined could provide some support for the euro in the late European session today.
Okay, interesting. And did yen slide against the USD continue yesterday?
Oh yes, BOJ's ultra dovish policy and I would dare to say loose monetary policy practically continued to weigh on JPY. It's characteristic that USD Jpy found new 20-year highs. So we had not seen these levels for USD Jpy that high since 2002, if I'm correct. That's since end of January 2002. And we would also like to note, though, that there is another issue which is slowly starting to emerge, is that Japanese Prime Minister Kishida had rather substantial spending plans, and definitely he's going to be needing low interest rates. So practically the bank is also, I wouldn't say forced, but there is a second reason why the bank should keep rates at a low level and the monetary policy at an ultra loose level. Last but not least, I would expect also some reactions from China. Let's not forget that both the Japanese and the Chinese economies are manufacturing economies, and they're competing. So practically the valuation of JPY makes Japanese products even cheaper. And that may more or less increase the competition between Chinese and Japanese products. We may see the Chinese complaining about a manipulation of the forex market. However, there's little they can actually do.
Okay, I understand. And do you have any comments on the weakening of TRY?
Definitely, TRY's weakening yesterday took the markets by surprise. It may have been resulted also due to Turkish President Erdogan's comments early in the week, where he stated practically that the Turkish government is going to be pressing for lowering the interest rates even further. Please note that currently Turkey has an inflation rate which is above 75% year on year, which is huge. Estimates are that the food prices are even accelerating at a faster pace. At the same time, we have forex reserves, hard currency reserves, which are depleting, and practically that allows for less ammunition for the Central Bank of Turkey to actually buy the lira from the markets and defend it, keep its value high. So more or less we tend to see the possibility of a negative spiral for the Turkish economy, given that it already has very high inflation rates. A devaluation of the lira practically would make imports even more costly. And that in combination would practically provide important inflation within the Turkish economy, accelerating inflationary pressures even further. And that could more or less be a vicious cycle for the Turkish economy. It's a big issue, and investors are worried quite much in this case.
I understand. And do you think the Aussie got more strength by China's trade data for May?
Actually, the release was today in the Asian session. AUD USD got some slight support upon release, not much. But overall, I would highlight the importance of China's trade data beyond Aussie as such, which definitely it tended to provide some support, fundamentally given that the import growth rate from China accelerated beyond market expectations. And that was a positive sign for Australian exporters of raw material because they have a high amount of exports towards China. So that would mean that the order books of manufacturers and raw material providers to China would be increasing even further. I would highlight though also the trade balance, which widened more than market expectations, surpassing 70 billion US dollars. It was substantial. And the combination of the two practically seems to imply that the Chinese manufacturing sector is waking up. And more or less that's a positive sign for the global economy, for growth, once again.
Okay, and how is the CAD behaving?
Well, the CAD retracted a little bit against the US dollar, but is still on a strengthening mode. So the retraction was not much. I would be highlighting practically BOC Governor Tiff McClellan's speech today. And most probably we expect a hawkish tone to prevail, a confident tone to prevail. And that could provide some support for the CAD today in the afternoon. Other than that, I would be highlighting also the path of oil prices, which are picking up and strengthening, and could more or less provide further support for the CAD, given that Canada is a major oil producing country.
So speaking about oil, so what fundamentals tend to push oil prices higher currently?
It's a combination. On the one hand, we still have a very tight supply. So practically production of oil remains, I wouldn't say stable, but increases at very slow pace. On the flip side, we have mentioned already also the awakening of China's manufacturing sector.
Right.
So we may see demand, especially from Asia, increasing substantially. It's characteristic that at the beginning of the week, Saudi Arabia announced an increase in prices for its oil exports to Asia, and that would be an indication of how confident actually the Saudis are about the demand side of oil. So practically that could push oil prices even higher, in combination also with increased demand from China. There is a small issue here which tended to worry a little bit traders. That would be Shanghai, and actually, to be more specific, Shanghai seems to be about to instigate new lockdown measures. That's from Saturday morning onwards, and that tended to create some worries. It's also a little bit symbolic because Shanghai was one of the first Chinese cities which came out from lockdown. So seeing Shanghai once again imposing lockdown measures, that would be detrimental for oil traders' morale somewhat and could keep the lid on oil prices.
Okay, and what about the US stock market?
Well, US stock markets actually dropped yesterday, but they didn't drop as much as to change their movement, which is currently sideways.
Yeah.
The US stock markets are currently in a wait and see position. They want to see how the fundamentals are going to be playing out in the next couple of days in order to make a more informed decision about their course. Let's not forget that tomorrow we get the US inflation rates. And next week we have also the Fed's meeting on Wednesday, which is going to be announcing its interest rate decision, probably another rate hike. So market sentiment is the key, given also that we had in the past few days very few high impact financial releases from the US. So we may see more or less a positive market sentiment once again pushing US stock markets a little bit higher. And when we're talking about US stock markets, we are talking about the main indexes. That would be Dow Jones, S&P 500, and NASDAQ. On the flip side, should a cautious sentiment be present in the markets, we may see US stock markets starting to drop even further, which could endanger the sideways motion and turn it into a bearish one. I would like to see, though, the American Open to get a clearer sense of where the market sentiment is actually heading to.
Okay. And finally, what about the gold price?
Gold's price has been in a very tight range-bound movement. On the one hand, a slight weakening of the US dollar failed to benefit gold's price. Note that gold is actually denominated in US dollars, so whenever we have a rise of US dollar strength, then gold's price sinks, and vice versa. Whenever the US dollar sinks, gold's price rise. So there is a negative correlation. But given the inactivity in both trading instruments, the USD index and gold's price, we see that there is a stable movement. There is, once again, one small catch here, and that would be US Treasury yields. US Treasury yields were on the rise, once again, and that tends to create some worries for gold traders, given that US bonds are also considered to be a safe haven, so it would be somewhat antagonistic to gold, and given that bonds also produce interest while gold does not, whenever we have yields which are rising, then that tends to lessen the demand for the precious metal, and on the contrary, investors prefer bonds.
Perfect. So that's it for today, guys. Thank you so much, Peter, once again. And stay tuned. We'll be back. Thank you.
So, welcome to the technical analysis part. What we have in front of us is the US dollar index 4-hour chart. Let's readjust these levels once again. So the USD moved slightly lower, slightly higher for the day yesterday, but practically remained above the upward trend line. We can see that the wedge, which has started to form more or less, is being maintained. So we have a wedge here, see the upward line, in combination with the 102.75 resistance line, which tend to keep the price action and actually condensing it. And we may see the price action breaking to the upwards. However, we'll have to wait and see which is going to be the strongest one. Well, it's going to be the upward trend line or the 102.75 resistance line. Should the bulls take over, we would expect the 102.75 resistance line to be broken, and for the index to start aiming for the 103.95. However, we may see a small recess being taken by the bulls at the 102.25 as it did here. Main target though, 103.95 after the 102.75 is broken. We also note the highest level in our chart, which would be the 105 resistance line, to the downside, and should the price action of the index actually break the upward trend line, yet remain above the S1 102.05, that would be a signal to switch our outlook in favor of a sideways bias between the 102.75 and the 102.05. Should the price action break the prementioned upward trend line, the 102.05, and start aiming for the 101.30, that would be a signal practically for a bearish outlook to starting to emerge. Lower than 101.30, note that we have also placed as a mid level the 100.50, while the lowest level noted would be the 99.80. For the time being, the RSI indicator tends to remain just above but close to the reading of 50, implying a rather indecisive market, but at the same time possibly with some slight bullish tendencies. Also note how the Bollinger Bands are keeping the distance yet moving upwards, while the moving averages, the 100 and the 200, are moving in a parallel line. Quite interesting. Let's have a look at Euro-USD now, with the ECB's interest rate decision being the main issue for the day. The bank is expected to deliver its interest rate decision later in the European session. It's a late European session. Now, the bank is expected to remain on hold, albeit we have to mention here that some market participants may be expecting a slight rate hike of 10 basis points in the deposit rate, raising it practically from minus 0.5% to minus 0.40. But overall, even that does not alter the picture materially here. The main issue, in our opinion, will be whether the bank will be actually foreshadowing rate hikes to come in the July and September meeting. I would also like to see an official announcement of the end of the bank's purchases program, asset purchases program, probably at Q3, main focus being in early Q3. So that's another issue which we should keep in mind. And finally, I would also note Christine Lagarde's press conference around 40 minutes later. It's a big issue given that the bank is practically going to issue a statement which may increase market reactions substantially. So we may see the ECB president actually trying to play down and moderate these reactions. For the time being, EURUSD maintains a sideways motion between the 1.0740 and the 1.0625. There's one being here, the R1 being here, sorry, here. Now, should the price action break either of the pre-mentioned levels, that would be a first signal practically for a change of trend. And should the R1 be broken, that would force us to switch our bias for sideways movement in favor initially of a bullish outlook, as the price action may start approaching the 1.0935, the R2. While even higher, we note the R3 1.1185 to the downside, and should the bears take over, we may see the price action clearly break the 1.0625 and start aiming for the 1.0480. Even lower, we have the 1.0355. Next big stops for the EURUSD is after ECB's interest rate decision. Definitely the US inflation rates for May, which are due out tomorrow, and on Wednesday we have the Fed's interest rate decision. So those are the three main events which I expect to affect, along with fundamentals from either side, the pair's direction. Note the RSI indicator, which runs just above but along the reading of 50. At the same time, we note the narrowing of the Bollinger Bands upper and lower. So that tends to imply or reflect, if you prefer, also the lowering volatility for the pair. Once again, sideways motion expected, unless ECB's interest rate decision this afternoon alters the pair's direction. Moving now to the pound, also in a sideways motion. It was interesting in the pound's fundamentals how Johnson is trying to deflect attention in the political scene, UK Prime Minister Johnson, from Partygate to other issues. It was characteristic that initially there was some talk about the UK overriding the Northern Protocol. However, that seems to be being played down right now. The new issue seems to be the housing policies of the government, which could actually, if announced, provide some support for the pound. Nevertheless, for the time being, the GBP USD remains in sideways motion between the 1.26 and the 1.2470. It's a clear that both levels have been respected. The support line here, 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 the resistance line here, and here, as well as here. Should the bulls take over, I would expect the price action to reverse direction, break to the upwards, the 1.26 resistance line, and start aiming for the 1.2775. Note that such wide distances, albeit seemingly being wide, for the pound and the US dollar in combination should be no issue. See in prior days the candlesticks, which were quite wide, higher than the 1.2775, which provided some resistance back here. We also note the 1.2965, which is the highest level targeted by the bulls. To the downside, and should the bears take over, we would expect the price action to break the 1.2470 and start aiming for the 1.23. Note the support provided here and here around the 4th to the 5th of May. Lower than that, we note the 1.2165, and that would be the lowest level in our chart as well, which provided support around the 11th to the 12th of May. Very interesting chart as well. Moving now to USD Jpy, which continued its upward movement, but in the European session today has corrected lower. That's nice. Here you go. So we had USD Jpy, which, in my opinion, is still not out of the woods. But nevertheless, the breaking of this deepening upward trend line here is definitely signaling that the bulls may be taking a break and the stabilization of the pair could be present. Note that the RSI indicator also dropped just below the reading of 70, which tends to imply that the bulls on the one hand seem to be losing steam, but on the other hand are still present, given that the indicator remains at rather high levels and hasn't dropped all the way down to 50. We would like to see, though, a breaking of the lower upward trend line as well before switching our bias, a bullish bias for the pair. And we treat this drop currently as a correction lower. I would like to see more downward movement before actually switching my outlook here. To the upside, and should the bulls regain control, we may see the pair breaking the 134 and start aiming for the 135. While even higher, we note the 136.50. To the downside, we note the 133, lower than that, the 131.35, which used to be another resistance line, and even lower the 129.60. Note how beautifully the level was tested once here, twice, here, and here. It was definitely broken a couple of times as well, but there was extensive testing as well. Moving now to USD CAD. That's interesting. Let me readjust the levels here. Now USD CAD with CAD trades actually focusing on BOC Governor Tiffany Clem's speech today, but also keeping an eye out for oil prices. Now, there is a retraction here against the US dollar. There's stabilization over the past 16 hours. But the downward trend line seems to be still present. I would like to see a clear breaking of the downward trend line before actually switching my bearish outlook for the pair in favor of a bias for sideways movement. And if that happens, the initial reaction would be for a sideways movement between the 1.2535 support line, which was tested a couple of times here and here, and the 1.2615, which was tested as a resistance line here, and the support line here. Should the bulls take over, we would expect the price action definitely to break above the 1.2615 and start aiming, if not testing, the 1.2685, which provided resistance here. Higher than that, we note the 1.2755 providing support here and has now turned to resistance line, given that the price action has moved lower. To the downside, and should the bears continue to remain in charge, however, that remains to be seen, given that the downward trend line is currently being put to the test, we would expect the price action to break the 1.2535, start aiming for the 1.2565, and even lower, we have the 1.2465. The RSI indicator tends to imply some stabilization, given that it remains near the reading of 50, it's just below it. So we may see the pair actually stabilizing and actually be able to provide a clear breaking of the downward trend line, which would be signaling a change of trend from a bearish outlook to a sideways bias. That remains to be seen, though, and I expect that in the American session we may have further news here. Note also that tomorrow we have a double test for the pair, given that we get, if I'm correct, at the same time the US inflation rates for May and Canada's employment data. Those should be in the American session, and should there be conflicting or diverging signals, we may see the pair actually increase its volatility It's quite lazy right now, isn't it? Let's have a look at the Aussie. The Aussie has clearly broken the upward trend line guiding it. There's no question on that. Let me readjust this. Remaining in a tight range-bound movement just above the 0.7155 support line. Tested it a couple of times. It's characteristic how the Aussie actually failed to gain traction from the release of China's rather robust trading data. Those were from May. They were mentioned in the fundamentals, the rise of the trade balance to above $70 billion, while the import growth rate accelerated from 0 to 4. Expectations of the market were of an acceleration from 0 to 2%. The actual data more or less overrode the market expectations, but the Aussie still failed to gain traction. We tend to maintain a bias for a sideways motion currently, and for it to change in favor of a bearish outlook, we would require clear breaking of the 0.7155 support line, and for the pair to start moving towards, if not test and breach, the 0.7035. Lower than that, we have the 0.6950 providing support here, while the S2 provided support here. It's interesting to note that in case the bulls take over, we may see the pair practically taking an upward movement, and just to make sure that the bulls actually did take over, would require a clear breaking of the 0.7265, the R1, which provided resistance around the beginning of the month, 1st to the 2nd of June, and around the 4th to the 5th of May. Higher than that, and should the R1 be broken, the way would be paved practically for the R2, 0.7340, while the highest level noted would be the 0.7465. For the time being, we tend to maintain a bias for a sideways movement. The narrowing of the Bollinger Bands over the past 20 hours tends to more or less confirm the lowering of the volatility for the pair. At the same time, note how the RSI indicator runs just below the reading of 50, implying also rather indecisive market regarding AUD/USD's direction. That should be no issue. It's interesting to see what happens here. Moving on to CHF, this would be USD CHF. The Swissy gained some traction, lost some traction, and the US dollar pushed higher. Let's readjust these resistance support lines. It has broken above the 0.9760, so the R1 now turns into a support line, given that the price action has broken above it. And the next resistance line is going to be placed here, which is the peak of our chart. In red, that would be the 1.065. Let me adjust this. Note that next week will be quite interesting for the pair. We're going to be having the Fed's interest rate decision on Wednesday, and the next week we are going to be having also the Swiss National Bank's interest rate decision. So we may see some increased volatility. Note also that in Switzerland, inflation has been on the rise. And that's a big issue for the Swiss economy, given that it was always used to very low inflation. Prices are already pretty high there. At the same time, once again, we get the Fed's interest rate decision, which is expected to provide practically an interest rate hike, probably of 50 basis points. However, the tone of the decision is also going to be playing a substantial part in USD's behavior. At the same time, inflation rates tomorrow could also affect of the US, could also affect USD CHF, probably strengthening the US dollar and pushing the pair higher. This would be at 1.0065. So given the pair stabilization, for the time being, we expect a sideways movement just above the 0.9760. Should the bulls actually take charge, and note how the Bollinger Bands have turned to the upwards, practically reflecting this movement here, we may see the price action aiming, if not breaking, above the 0.9875, despite the very tight range-bound movement over the past 16 hours, even further, couple of days since here. I would highlight and take notice that the pair is capable of large movements, and note this movement here, or this one, which covered practically the whole distance between the R1 and the R2, or this one here, or these consecutive green candlesticks here. So despite the tight range-bound movement, the inactivity could prove to be temporary. So I would keep my eye out here. For the time being, the RSI indicator has corrected below the reading of 70, but it would imply that the bulls are still present for the pair. They have not left the field and could push a little bit higher the price action before re-entering over both levels, with the RSI indicator once again rising above 70. Should the bulls actually take charge, I would expect as a first sign the price action of the pair to actually reach, if not breach, the R1 0.9875 and start aiming for 0.9980. Note how beautifully it was tested here, while also aimed for once, twice. And even higher, it's an extreme bullish scenario would note the 1.0065. To the downside, and should the bears take over, we would expect the price action to break below the first support line, which is the 0.9760, and start aiming for 0.9640. Lower than that, and the lowest level, the price action of our chart, would be the 0.9550. Let me widen this. That's better. Everything in place. Let's leave now USD CHF, and we're moving to USD TRY to see what happened to yesterday's rise. There was a stabilization here. Let me adjust the levels once again. But the bulls seem not to have left the field here. There's a very, very slow, slight upward movement. It should be more obvious in the 1 hour chart. Let's magnify this one. Yeah. It's still here. Okay. Back to the 4 hour chart. We're adjusting the levels. There you go. So the price action was able to finally break above the 17 resistance line, now turn to support. Clearly, it was characteristic that the price action even tried to correct a little bit lower, but was not able to break once again the 17 support line now. So practically the bulls are still present, albeit there is some hesitation, and that's understandable given that the RSI indicator is clearly above the reading of 70, implying that the price action may have reached, not may, probably has reached overbought levels. A correction lower should not take the markets by surprise, traders by surprise. We tend to maintain a bullish outlook initially as long as the price action remains above that steepening of the upward trend line here. And we may see the price action though stabilizing somewhat if the bulls are somewhat in danger here. Should the bulls actually regain the confidence and push decisively higher, we may see USD Jpy breaking the 17.60 and start aiming for the 18.32. People, this would be, in our opinion, a record high level. And why I'm saying this, if we look at the, here it is. This is the daily chart of USD Jpy. You can see that practically the pair has reached this level. This was on the 20th of December last year. If we zoom further out to the weekly chart, we'll see that this peak has not been reached. This is the monthly chart, practically since 2007. So I wouldn't expect any levels before 2007 to have any relevance right now. A breaking of the 18.32, that would be a new record high for me. That's why the 19 round figure has been practically calculated, and we didn't find any prior peak to rest it on. To the downside, and should the pair correct lower and the bears actually find a chance to take over, technically speaking, I would expect the price action to break definitely the steepening upward trend line pre-mentioned, the 17 support line, and I would like to see also the upward trend line which has started to form since the 4th of May. I would like to see that being broken and the 16.4 being tested, if not broken as well, before switching in favor of a bias for a bearish outlook. Nevertheless, a correction lower here could actually be signaling a switch from a bullish outlook in favor of a bias for sideways movement. However, that would practically imply that the pair would not drop far below 17 support line, definitely not below the 16.4 second support line. That should sum it up for the day from all of us here at IronFX. Best wishes for solid trading.
Hello, everyone. My name is Savas.
Hi guys.
This is Odysseas. Today we're going to talk about live floating and live fixed spreads. So, Odysseus, how many live floating accounts are there?
So basically we have 4 live floating accounts. As you guys can see on your screen, we got the standard account, the premium account, the VIP account, and the live zero fixed spread account. So we've got these 4 accounts
All
here.
right, 4 accounts. That's nice. Can you analyze the accounts for us?
Yeah, sure, of course. So let's start with the standard basic account. So we have, as you guys see, we have the ability to trade on CFD instruments, which is forex, metals, indices, commodities, futures, and shares. Right? We got the minimum lot size, which is 0.01. Yes. We have the basic currency, which it can be US dollar, can be euro, GBP, AUD, JPY, of course, BTC,
Bitcoin,
yep,
nice. That's good.
PLN, and the CZK. Now, we got the spread, which is a floating from 1.8 fixed to a 2.2. And of course, the commission, which is like commission.
Oh, that's great.
Yep, the flexible leverage can go up to 1,000, and the stop out it's up to 20%. Now, for the Islamic accounts, which is an option for
So
people,
we do, yeah, all right.
of course, yeah. We have the swap-free accounts, and a dedicated account manager, of course, which is for all the accounts.
So whenever someone needs, they have their own account manager, basically.
24/7. Now we've got the dealing department, which is transactions. It's like a hotline. Of course, you got them there anytime for your service. And this is basically the standard live floating account. To go on with, we have the premium account, which is basically kind of like similar with the standard account. The difference on the premium account is, as you see, it's the spread. It's floating from 1.6 fixed to 1.8.
All
right?
Sure.
And the rest you have the same as the standard account, the commission, the leverage, and your stop out. Now we have the third account, which is the VIP account. Now on the VIP account, the difference is starting from the base currency. Now you can use only US dollar, right?
All right.
And the spread, it's floating from 1.4 fixed to 1.6. We're talking about a huge difference from the standard
That's
account,
great,
of course.
yeah.
Yeah. And the rest, as you guys can see, basically the same as the standard and the premium account. And
So the only difference is basically the currency.
Yeah.
And the whole point is the spread, actually.
Exactly.
Yeah, that's great.
Yeah. That's what clients focus on about, basically, on the spread, which is quite a big difference, floating from 1.4 to 1.6. And finally, we got the fourth account, which is basically the live zero fixed spread account. Now, on this account, you guys can see there's a lot of differences compared to the other 3 accounts. Now, you have CFD instruments to trade with, which is forex, metals, indices, and commodities. That's it. Now, your minimum lot size, as you can see, it's the same. It's 0.01.
Yep.
And the base currency is US dollar and the euro. Right? So you have one more option here. And where the huge difference comes is on the spread, which, as everyone can see, it's fixed to 0.
That's amazing.
Yeah, it is. It is. Now there is, of course, a commission coming. Now that's a basic standard commission coming from the company. That will be something to talk about with your senior account manager, of course, once you get started with your account.
All right.
Yeah. And you've got the flexibility to have a leverage up to 500, which is also different from the other
Previous
three accounts.
accounts.
Yeah, the previous accounts are up to 1,000. This is up to 500, right?
But still, you have zero spread, so it's still amazing.
Exactly. And you see your stop out, it hits at 50%, right?
Instead of 20, yeah.
Yeah. So basically, this account, it's usually coming for experienced traders. Yeah. And the rest, as you guys can see, you can always have this account if it's even an Islamic account, if that's an option. You have your account manager there 24/7, of course. And
Which is very important.
yeah, and the dealing
department.
transaction. Yeah. So this is basically the 4 accounts that the company IronFX provides as live floating and live fixed spread accounts.
They're actually amazing, especially the one I would prefer was either the VIP or the live zero fixed spread. Obviously,
I know.
Right.
For obvious reasons,
Yeah.
right? I know.
Right.
So guys, this is the live floating and the live fixed spread accounts. It was a pleasure being here with you guys again. Now, of course, it was a pleasure having Savas with me today. And for the next week, we guys are going to be analyzing and talking about the STP and the ECN accounts. So we can break it down for you again with a little bit more information, just like today.
All right. Thank you very much, Odysseus.
Thank you so much, Savas. It was a pleasure having you guys. I wish you guys a great rest of the day and a great weekend.
Adios.
Ta-da.
Hello everyone, thank you so much for joining us once again. Today I have my wonderful co-worker Jack Carter with me from our affiliation department. Hello Jack.
Hello everybody, it's a pleasure to be here today.
Amazing. So Jack, today I want us to go through the Q&A regarding affiliation. So let's get started.
Let's go for it.
Amazing. So Jack, I want you to tell me what is an affiliate exactly and how does it work?
Now, basically an affiliate is someone with an online presence, maybe a website or social media that could refer potential clients to our company to trade. That's
Okay.
essentially affiliate.
Amazing. Easy, right?
Very easy.
So the next question is, what kind of requirements do you need as an experienced affiliate and as an unexperienced affiliate to start?
Well, for an experienced affiliate, of course, they already have all the tools necessary. They have the website and obviously the online presence needed. But we have additional marketing tools for them, such as banners and landing pages, to assist them further in their course as an experienced affiliate. Now, for new affiliates coming in, we offer one-on-one guidance to help them to explain more about SEO, PPC, SEM campaigns,
Okay.
and just to basically assist them along their way and on their journey on becoming a better affiliate.
Okay, amazing. And now, I want to know, do you actually need experience in affiliated marketing or forex?
No, not necessarily. You don't need to be a professional to join our affiliate program or to become an affiliate at all. All you need to have is the medium to promote. Social media like Facebook, Instagram, even Telegram and WhatsApp, or a website. If you have this, then you can become an affiliate.
Okay, that's amazing. So you can literally start from scratch when it comes to
Exactly.
affiliation. You don't necessarily need a website.
No, it can just be an Instagram page or a Telegram group, anything like that. If you just have an online presence at all, then you can start to become an affiliate.
All right. I mean, especially today when social media is so strong, I think that's a very good point. We have a lot of influencers that could actually become affiliates, right?
Of course, yes, exactly.
That's amazing. So let's say someone gets started as an affiliate. How does it work? How do they refer clients to us?
Very good question. So if you do have, let's say, for example, a website or a blog, you can access our marketing tools and you can choose various banners for various promotions that we offer or specific markets that we offer as well. And there are also specific links or landing pages that you could use to target your audience with for whatever they want to do or whatever they want to trade.
Okay, and a question that I think everyone wants to know is how do they get paid? What kind of payouts do we offer?
That's also a good question. Now, we offer a large amount of commissioned plans. Okay, so we have the CPA payments or the tiered CPA as well. First-time deposit commissions, hybrid plans, rebates, revenue share. We have a whole host of different plans that can be also integrated together for hybrid deals as well. We're just very flexible with these plans.
So, perfect, Jack. I think we covered the most frequently asked question. Now, I want to see your point of view. Like, is there something that you would say to potential affiliates out there that want to get started, but they're not sure? And why should they get started with IronFX and not any other broker in the industry?
What I would say is, if you do have an online presence and you think you're capable of doing it, then don't hesitate. Give it a try. It might turn into something big for you. You know, because we offer the one-on-one guidance, competitive schemes, and a heap of marketing tools that can help you. We can help you go on the long run and become a successful affiliate. Because we're very flexible with the commissions as well, obviously this will give you a boost in your marketing. So here at IronFX, we're here to help you become more successful. Simple as that.
Amazing. And as I always say, we have these walkthroughs to help you guys. If you have any more questions, you can always contact our support team by emailing us, or you can chat with us on the live chat support. And thank you so much for tuning in. Thank you, Jack, for this extremely helpful walkthrough. I'm sure that this will help a lot of potential affiliates out there. And guys, don't forget to tune in tomorrow for our next live session at 12 p.m. Until then, I wish you a very good day. Bye-bye.
See you in a bit.